Hello folks, I'm L.A. Little, and this is your daily TA wrap, where we take a look at these markets from a neoclassical perspective and ask ourselves, what happened today, and what does it tell us about tomorrow? I do a show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. Folks, I am glad you could join me. This week, actually, we will not be live on Thursday night, neither Sunday or Monday. Taking a little vacation, so we'll be taking some time off. We'll be here tomorrow the next day, and then a little time off. So just for a programming note, as far as the markets, talk about a programming note, let's look at see what they did. If we take a look at the markets, we had a down day again. This is, I think, 3 in a row, if I remember right. 49 points lower on the Dow, 15,401. Kind of dripping lower here. The S&P's down 8, 1701, almost 1702. Composite down 9.5, 37.65 and a third. The NDX down 5 and a third, 32.19. Apple, big mover there. That was why the NDX was as strong as it was. The Russell actually didn't hardly give anything up. 107.2 was the close, down less than a point. So equities working lower. We had gold work lower by about 5. Oil was down a buck or so, buck and a half. The dollar was up slightly. Bonds were up a decent amount today. They're up again after hours. It was a day of testing, and if you remember when we talked about this last night, we talked about Friday and this abnormal set of volume that came into this market over the past Friday, right? I mean, huge volumes, not only here domestically but around the world, and it was kind of a question mark in my mind as to what it meant. I expected some sort of a downward bias this morning, potentially a lower test, a full test of that S&P. That's what I told the members, and that is what we got. 1,768 was that low from the August 2nd swing point high. We got down to 1,697, so we cut underneath it, right? 1708.68 closed over it. Did 31.2 today, had 31.3 and a half over there. So you hit under it, back over it, not as much volume, and you close back over the Fed day. That low was 17.035. You're closing at 17.0184. This looks like it wants to turn around and try to go back the other way. Right? You come down fairly fast. You take away, right? You get to pop the top move and you come back down. Looks to me like it's going to try to flip around and go back up and test a little bit more to the upside. Now the Dow is an anomaly here. The Dow, I have no idea what it's doing. Well, I kind of do, but I mean, it had a huge run up because of the rejiggering, right? Now you get a push off of that highs, and a big part of that now is the weighting inside your Dow has changed, right? If I go in here and I pull up the Dow, and let's see here, if we put it on, we'll put it on highs to lows. Visa is your highest price stock now, and this is a price weighted index. So Visa is your highest price stock, down 250, down 1.33%. Goldman Sachs, your third highest. IBM used to be all by itself up there, right? I mean, these three now are the heaviest weighted. Goldman Sachs down 2.65 today. Well, guess why the Dow went down? You're pushing down with the big guys, right? Because it's price weighted. That's the deal. That's why the Dow's doing what it's doing. Until the Dow, the rejiggering wears off, I think you best just probably ignore it, or at least watch those three, because those three now, just like Apple moves everything in the NDX, now you've got a huge weighting structure at the top of this index. It's going to, I haven't done the numbers, but I'm guessing it's up around 25% in those three at least. So a quarter of the Dow weighted in three stocks probably. I'll have to go look up those numbers because I need to understand what they are anyway. So I'll look at those in the coming days. But anyway, the Dow's coming back. I wouldn't pay too much attention to it. I don't think it's going to give us any good clues right now. NDX. Now the NDX comes back in. Volume a little bit lighter. You get back underneath yesterday. You're drifting back in. There's really nothing here to give you any kind of tell. That doesn't tell you anything. Doesn't tell me anything. I doubt it tells you much either. And the NDX bleeds into the NASDAQ. The NASDAQ now, actually, you know, if you want a bar to measure against, you want to measure against your Fed bar. 18th of September, that bar, the bottom is 37.37. You got as low as 37.45. So you're not testing. You're doing 17.2 back into 18.2. So, you know, as far as I can tell, that looks fine, but it's not really giving me any kind of test yet to really make any kind of conclusions off of. The Russell, however, did a test. Well, it did almost a test. The Russell comes down. That low was 1063.90. That swing point high it was trying to get back into was 1063.52. So you miss it by 38 cents. That's pretty close. You're pushing into it with, you got 252 over here. You're pushing into it with 312. But the bar up, the breakout bar, is this bar, and that bar has got 277. So you're pushing in with heavier volume. You didn't quite do the test, which says that you can come back and do the test, and the fact that you pushed down with as much as you did says you probably will come back and do the test. So when I look at it from that perspective, the Russell actually is saying this testing process isn't over. Might not be tomorrow, but it's not over. So that's the indexes. So you got one index, the SPX, doing a successful retest, regenerate, going to try to push back up. Dow, you kind of got to dismiss. XY, the IXIC and the NDX, the composite and NDX, not really telling you anything. The Russell's saying, hey, I tested, actually didn't quite test, but almost did, and had more volume, which means I probably will test again. If I go to the sectors, now I haven't looked at the sector, so let's actually, I'm going to have to pop over. I'm going to have to pop over here because I just started glancing at them, and the volume numbers don't look right, so it looks like we didn't get good updates today. So I'm going to flip over to a different, and this unfortunately is adjusted data, so we'll have to adjust for the adjusted data, I guess. I wanted to show you Apple to start with. If you look at Apple, and if you're doing classical TA, that's an island reversal. It's a huge one, right? You gap up today, you do volume, right? You're pushing higher. This looks like it wants to work higher now, right? You got that little line there. It's probably going to hold. As long as it holds, you got a get island reversal type of situation. I do pay attention to these. The fact that we move back up into this bar, that bar had what did it have, 26.5, and you move back into it with 27. So you're pushing volume back into it, leaving a gap area, an island reversal. That's pretty bullish. And if that in fact holds, that's going to be bullish for the NDX and the NASDAQ itself. So it's worth noting in terms of Apple. Let's go look at the index. I mean the sectors now. So IYT. So I want to just do the reads on the volumes here and see what they really look like. The swing point high, and what I guess what I'll do is I'll use this. Yeah, I'll have to do it this way. I'll have to use this so that I can look at the volumes. So we did in this swing point high, we did 509. We're coming back with 336, and if I glance over here, the volume or that high is 119.45. So 119. So we're into the bar. We're back into the bar on an adjusted basis. I mean a non-adjusted basis. So lighter volume. That's just a retest, regenerate going on. So it's too early to know what it means right now. Looks fine because it's coming back with lighter volume. But you're into the bar. The semiconductors. They're not even close. They're just drifting back. That's not really telling me anything. That's like the NASDAQ, not really saying anything to me, other than the fact that it's strong, right? That's what those indexes are telling you. That's what this sector's telling you. The XLB, it's got a long way to go to get back. Okay, so now this one got under the Fed bar, 42.41, so you're under it. $42.31, $42.21. Yeah, that's going to come down a little bit more, and then we're going to see it try to bounce. So the XLB a little bit more negative. Let's see what the XLE did. Now the XLE, it was interesting because the XLE was the one that looked like it was going to break out and run and never could. So it's under the Fed bar, had more volume, does light volume today, coming back in to do a swing point retest regen. Let me pop over here to the XLE. So that high, 83.96, 83.50. So we're into the one and testing into the other. We're doing 10.6. We don't have the volume. That also looks just like the IYT. That's a retest regenerate that looks fine. It's coming back as it should, which says it should try to flip around and go back the other way. XLF. Okay, now the XLF, remember way back here, I don't know if you remember, it's been a while now. The XLF was the one that gave us a clue that something was up and we were going to get a deeper retrace. Way back here in August, right? Late July. Remember in June we were down, July we just ran up straight, and then we pulled back and we go back up, and the XLF was unable, and this had been the leading index up until then, one of them, couldn't make a new high. Well, again, we come up, we can't make a new high. Remember now, we've made new highs, XLE new highs, XLB new highs, SMH's new highs, IYT. I mean, go down the list. They've all done it. XLF couldn't do it. That may be another tell. We're going to have to watch this closely. You come down, volumes expanding today. This does not look good. Now, the good thing about it is it's coming back into a bar. It's got some volume. High on that's 20. Let me see what that price point is on a non-adjusted basis. It is 20. Okay, so that's good. So it looks like the adjusted basis and non-adjusted, at least for right now, looks the same. So coming back into it, doesn't have the volume. We'll see what it does tomorrow, but it needs to gather itself here. Maybe it closes this gap area and then finds itself. This is one I would be watching though. XLI. So other than the XLF, they look pretty positive. Here's the XLI. That looks very positive. Holding the gap. This one looks like it's ready to flip and run the other way already. So that XLI is the strongest looking one so far. XLK also is going to look strong probably given Apple, and it does. So it tests back into this low, into the swing point highs. It's got more volume, but it doesn't have more volume than the breakout areas. So that to me looks good. XLP. Now this one was coming off pretty hard if you remember. Let's see what it did today. Still comes down, closes the gap. Okay, so the gap's got more volume on it. That actually is going to flip back around here now that it's closed the gap probably. So that's a positive. So as I go down these indexes, I mean these sectors to me look to support the SPX. They look to support the idea that the SPX is going to flip around and go back the other way. XLU looks that way and actually did it today. XLV, so it tested that low and went back up. XLV test into the swing point high, doesn't have the volume. That one also is probably going to flip around and try to head right back up. 51.18, that looks good. So let me see it over here just to make sure. That low was 51.13. Yeah, that looks fine. So that's, you know, I like the way the sectors are set up here. Let's look at the last one, XLY. The sectors look to run this thing higher tomorrow, and the SPX itself wants to. The XLY is not as clean, but it's actually okay. It tested the Fed bar, got underneath it, back over and held. So I believe you're going to see some sort of a push back the other way. tomorrow as a result of the way the sectors are set up. The biggest negative out there that I can see right now is the financials, and they're about to come into an area that has more volume, and they've come off hard. And we can go back and look at that one more time. But they're coming off hard. They're going to come back into this bar with more volume on the 7-1 bar. And it looks like to me that's probably where they're going to catch a bounce. And then the bounce will be everything. What does it do? You know, how does it act? That's 60, what is that? 64 points down. 2081 even more. That's almost 70 points straight down. That's 3.5% in 3 days, folks. And the financials are a large part of the SPX. That's a big piece of what's happening. Okay, let's go look at the OX markets and see what they look like. And in particular, I want to look at the bonds, because the bonds to me are really the clue going forward here. If you look at the statement that the Fed made, why they didn't taper, kind of hidden in that message was the idea that the bonds, the rates backing up on the bonds, there was some talk about, well, they didn't understand why. That was one thing. Well, excuse me, you're talking about tapering. You're talking about taking quote-unquote demand away from the bond market. So that's a big piece of it, right? But the Fed essentially said, hey, you know, rates backing up, we can't have that. And that was a big part, I believe, of why they did not taper. It turns out that looks to me to be why. Okay, so you get over 105.55. Yeah, you get over it. And now you're coming into this bar. Now that bar has 105.85. You're coming into it with 10.1 against 10.4. Yeah, this is doing exactly what I thought it was going to do, and that is it's going to go after that high. It's going to go after that high, and then it's going to try to do the retest regen off of this bar. And the top of that's 107.50. That's where I'd be looking. This little area, once these redraw tonight, you'll see a resistance zone right at this high to this high probably is where it's going to draw. You may get one. Actually, you'll get one off of here and one off of there too. So because there's going to be resistance all the way back up, but you're starting to see the turn. You can see the turn coming here, and if this turn happens, that's going to be positive for equities while it takes place. All I can hear now is how the Fed has lost control of the bond market. Right? I've heard that 15 times already. You know, read the charts. The charts are turning. If they lost control, well, maybe they're exerting control again. I don't know, but it looks to me like the buyers are coming into this one. Let's look at the dollar. I don't know that it's a big story right now other than the fact that it can't lift, and it certainly didn't lift today. Yeah, that is just an ugly chart. Let me look at what the FXE looks like. Yeah, FXE is going to drift in maybe a little bit more. Because it's back into this bar, but the dollar's not going to go very far, and the FXE is actually going to rise again. It looks to me it's going to go after the swing point high on the weekly at about 136. Gold and silver, I know everybody has interest in these, so let's take a quick peek. Gold was down about $5 today, tried to lift, couldn't, coming back in. Oh, I don't know. Today doesn't tell me anything really other than it couldn't lift, but I don't know if that really tells me much. What really is going to be important is what does gold do at the bottom of this bar if it gets there. And given how deep it is, it probably will get there. So, nothing to say there. Let me flip over to your questions because I know you have some. Let's see what you got up here. So, good evening, yes. TKR, good place to buy. Let's see what TKR looks like. So, let me get up my sheets, stick in TKR. And see what we got. Folks, if you have a question, just pop it in. We'll take a look at it for you and see what it looks like. If you have a general question, if you have a stock you want me to look at, just type it in. And fairly soon we will have it so you can just text it in if you want to. You can text it to us. That's coming next week, I believe. Okay, so TKR, the tinking company, somebody brought this up recently, had a big spike up. Okay, so you're coming back in. Now you've already done the retest regenerate off these highs, right? The spike up and then the next bar really tested them all. And the volumes were heavy, right, on the test, but not heavy compared to the breakout. And it was heavy compared to these, but it was not heavy compared to the breakout bar, which allowed you to move higher. Now you're coming back in to test again. And that looks like a buy to me. So what was the question? The question was 61.25 to 61.30. Yeah, if it gets back there. I don't know if it will. But yeah, I mean, that's the ideal spot. Right at the bottom of this big bar. 61.13. So yeah, if you can get down in that area, that's a good spot. I would use the bar next to it as the bottom, 60.61. You know, it could get deeper, but that looks like a good place to put your stop. So I would put it, do an ATR on it, put it up underneath there, and use that as your bailout. You don't have to risk much, and this thing's pretty strong across all time frames from what I see. Okay, so next one, Fred. Financials responsible for a lot of weakness. Yeah, it was. Oh, I just answered it. Yes, I did. Okay, great. Yeah, the financials really the tell of the tape as far as the SPX right now. The financials got to at least quit taking away from it. And as you saw in the Dow, Visa, Goldman Sachs, all those guys were a big piece of it. Now the financials, if I go back to them just real quick here, you know, the big spike up here in the financials, I mean, this was a heck of a run. So to get a pullback is okay. It's just that you gotta stop at some point, right? You gotta put the brakes on, and so that's kind of the issue there. Let's see what else we got here. So DDD is another question. Let's see what this one looks like. This is 3D. It's a printing company. It's another one of those fab stories, you know, where everybody's trading them and they run up a long way. I mean, this thing, if I look at the monthly, it traded at $8 into last year, and we're sitting at what, 60.55. So that's a pretty good run. All right, so what does it do? It goes over the top, has less volume, right? This top at 54.78 did 6.5. You do 4.13. You get over it, you come back down. Okay, so today you're testing back in. You're coming back into this big bar now, and the top of that guy is 54.08. You're closing into him 2 days. Yeah, I would not push a stock like this. You can't push on, right? What you have to do is nibble at it every time it drops, if you're trying to get long. So you just nibble. A retest, regenerate, which is what it's doing right now, right? Because this was your breakout. Immediate retest, regenerates. What's happening? It says you can get to the bottom of that retest bar and everything's still fine. That's 52.07. You're trading at 53.75. You got had a low of 52.65. So you really want to see it test down into the bottom deep like it's doing and hold, and that's what it's doing. So you just nibble at it when it gets down there, and you keep, you know, trading it that way. And you know, you've got a lot of support underneath this thing. If I pull it over and look at the weekly, you can see what I'm talking about. Big bars up here, you know, so there's a lot of support underneath it. It's going to be hard to break this thing down. Matter of fact, it's probably going to try to break out. So you just got to nibble at it as it gives you a chance. GDX. Let's see what GDX looks like. Okay, so GDX. So this is gold stocks. This is the big cap gold stocks. We'll look at GDXJ as well because it's kind of good to look at both of them. And what does this one tell me? Okay, so you're back under the Fed bar. Let's go over to the weekly. So this high is 24.66. You trade almost into it. So I would say you're going to trade into this thing. So you could get as low as about 24 24 to about 24.70 or so. It looks like where it's trying to get to. Yeah, so it's anywhere from 24 to 24.70 is where it's trying to get into. Let's see what the GDXJ did though. Let's see what the small caps look like. Okay, so the small caps, yeah, they're under it too. So it looks the same to me. The only difference here is that these actually have a decent support bar a little bit higher up. 40.67 was the low. You closed underneath it though. You had less volume, 1.4. Okay, so tomorrow is kind of a critical day for small caps. Gold stocks. You'd like to see that hold and get back into the Fed bar. And if they do, you're going to see probably the GDXJ, the GDX itself, try to flip around as well. This is not something I'd be chasing though. I think it's going to get deeper before it's done. You can certainly get a bounce out of this, but I wouldn't be trying to jump it yet. It's just not ready. LPX, let's see what that one looks like. So LPX is basic materials, and they came down pretty hard today. Alright, so the breakout bar on LPX was low as 1750. You trade down and close at 1751. You do 3.3 back into 8.5, back into your swing point high for the retest regen. So as ugly as that looks, that does look like it held today. And if you aren't in it and you want it, this would be the spot. Okay. All right. So tomorrow, you know, this week you got all the Fed speakers this week. I mean, I think we had 3 more today. We had 3 more Friday. You know, this whole Fed thing to me is a joke at this point, because each day you have a Fed meeting. And in the Fed meeting, you come out and you tell everybody what the deal is, right? And then you tell everybody what the deal is for the next week, at least from everybody else's perspective. I'm not understanding what value that is. I mean, used to, the Fed said this, and it was this. It wasn't that. Now it's this and that and everything else, because it's everybody's opinion. If that's transparency, folks, transparency is not going to help. You got to have, you know, I mean, you know, the whole idea of a democracy, right? Everybody gets a, you know, everybody gets a vote, blah blah blah. It's consensus, right? You can't have the Fed ran by consensus. As much as I dislike the Fed and wish it wasn't there, it's even worse to have it ruled by consensus, which is kind of what we seem to be getting anymore. So, you know, in terms of what the market's interpretation is. So to me, it's a mess the way it is. All right, I do expect, though, tomorrow you're going to see this market try to flip around, get a bounce out of it. And like always, every time you get a push up, and if we go back in here and we just, you know, we pull up the SPX, when you get a push up and you get a retest regenerate, what that means is that you're going to try to regenerate higher. Okay, what does that mean? That means you got to go back up and you got to test into whatever it was that pushed you down. In this particular case, the first bar is going to be a huge bar from Friday. Now, I don't know if the bottom of that bar is going to stop you, which happens to be about the top of the retest regen high, right? But if it doesn't, the top of that is going to be the real key, 17.25. So those are the places to watch if the bounce does take place. That's where my eyes would be peeled. Thanks, everybody. I appreciate you being there. You tell a friend, tell two, as always. I'm L.A. Little. This is and was your daily TA wrap. You have yourself a great night. Take care. Until next time, I'll see you then. Good night, folks.